Hello, let us look at another example of creating the trial balance, and always have in mind the accounting equation when preparing the TB. So for this example, we have KM Laundry Ltd running a business for cleaning. And these are the transactions that happened during the month of March 2026, and we want to create the trial balance as at 31st March 2026. So for the first transaction, we have the owner invested Kenyan shillings 150,000 in cash. Okay, so we need to recognize an increase to the cash account by debiting that account and recognizing capital to the equity account by crediting 150,000. This shows an increase to the equity account. Now let us look at the second transaction. The business bought a washing machine at Kenyan shillings 90,000. A machine is an equipment, so you need to recognize an increase to the PPE account first by doing what? By debiting that account, okay? And because you're paying in cash, you credit the cash account by 90,000. Then for the third transaction, the business took a loan of Kenyan shillings 80,000. So first, that is an increase to the cash account by 80,000. And then you need to recognize that now you have a loan that needs to be paid later, which is you credit the loan payable account to recognize that increase. Don't forget to recognize an increase to the a liability account, you credit that account. Okay, then you pay, the business paid 3 months of rent in advance of Kenyan shillings 30,000. So you pay, the business paid in cash, so you need to recognize a credit to that account 30,000, and you need to recognize this prepaid expense because you have prepaid something for 3 months. Okay, so you debit 30,000 to the prepaid expense account, which is basically an asset account. Then because we're preparing this as at 31st March 2026, we need to recognize that rent expense for the month of March. And if 30,000 was for 3 months, then for 1 month we have 10,000. So we need to recognize a rent expense of 10,000 for the month of March 2026. So you come debit 10,000, and now you reduce your prepaid expense, whereby you credit 10,000 to the prepaid expense account. Then you have the business provided laundry services on credit of amount Kenyan shillings 15,000. So you need to recognize an account receivable, which is 15,000. So you need to debit that account to recognize that you're going to be paid this amount. An account receivable is an asset account. And then you also need to recognize an increase to your service revenue for providing that service. And to increase a revenue account, what do? You credit. Okay. Then we have paid staff salaries at Kenyan shillings 20,000. So that means it is a decrease to your cash account because you're going to pay in cash, and also now you debit your salaries account because now you are recognized salaries expense. To increase as an expense account, you debit that account. It is usually on the left side of the accounting equation, so you debit. Then let us look at the other transaction, which you received cash of amount 15,000. That is, the business received cash of amount 15,000 for the services that were provided in credit. So you need to recognize an increase in cash. So you debit cash, and then you need to recognize that the receivable that you had has now been paid. So you credit your account receivable. Okay. So let us look at the balances. When we sum for cash account, we're going to have a total of 105,000. And then for account receivables, they're going to balance out to a zero balance. Then for prepaid, we have 20,000. Then for PPE, we have 90,000. Then for loan payable, we have a credit of 80,000. Then for a service revenue, we have first for the capital, we have a credit of 150. Then for service, we have a credit of 15. And then for rent expense, we have 10,000. And salaries, we have 20,000. Okay, now let us look at the TB, how it will look like. And first, always for the TB, remember, write the name of the business and always indicate that the trial balance is at which period end. Is it that for our insert, it is 31st March 2026. So let us add the balances of this account. For cash, we had 105, which is cash is usually a debit account. Remember the easy way to remember, we have dealer, okay? The accounts on this side are debit accounts. The accounts on this side are credit, okay? Debit on the left, credit on the right. So cash is an asset account, so we have 105. Then for account receivable, it's a 0, no need of adding it. Then we have prepaid expense. It's an asset account, which has a balance of 20,000, and an asset account you debit. Then we have PPE, which has a balance of 90,000. PPE has a balance of 90,000. Don't forget PPE is an asset account as well. Then we have loan payable, which is a liability, therefore a credit account, and has a balance of 80,000. 80,000. Then we have capital with a balance of 150,000, and capital is it's basically an equity account and is on the credit side. Then we have service revenue as well, 15,000, which you can see revenue is also on the credit accounts. Then we have rent expense, which has a balance of 10,000. Okay, expenses account are usually debit account. This stands for expense, and this stands for equity. Okay, so let's have that in mind. So we have rent expense of 10,000 and salaries 20,000. Okay, now let us sum. We're going to have 105 plus 20. That is 521 plus 90. We have 5. Then 215 plus 10 plus 20. That is 5,234. 245. So on the debit side, we'll have 245,000. Okay. Let's look at the other side. We have 80 plus 150. So that is 230 plus 15. So we'll have 245. So even on this side, we have 245. And that is how we know our trial balance is okay. It should balance always. If the trial balance does not equal, the debits are not equal to the credit, then it means there is an issue. Either you didn't pass a period end journal, or you passed a journal erroneously. So you need to look back and look for what you might have missed, and now go and reconcile this issue.